So first, this is what the liability, this is what the assets, but in this problem, they have given the expenditures, that remuneration and commission of liquidator. Then the bank loan pledge was also given. Then the debenture and interest thereon was secured on floating charges of all assets. Floating charges on all assets means whatever the assets is realized, from that the debentures holders with a principal and interest, they are secured for that. So what, from what source the money may be get by the or received by the liquidator, that doesn't matter when there is a floating charge on all assets. So whenever there is money received from sell of or realization of assets, that time the liquidator have to pay this debentures and interest thereon, as they are secured against a floating charge on all assets. So first, after paying all the liquidators and liquidation expenses and your secured loan, you first have to pay, and preferential payments, you have to pay secured creditors, that is what a debenture. Then you can pay unsecured creditors, then you can pay internal liabilities, for example your preference and equity shareholders. So first what we have to do, they have directly given that fixed assets are realized at a book value. So what is the fixed assets in this asset side? Can anyone tell me what are the fixed assets in this not so wells company limited's balance sheets? Are there any fixed assets? You can find that at the asset side. Asset is divided into two parts, fixed assets and current assets, right? So what are the fixed assets you can see right now in this balance?
Land and building.
Very good. And one more is there, other fixed assets.
Other fixed assets.
Yes, these two are the fixed assets. So these two assets are realized at a book value. So what is the book value which is there in the balance sheet asset side? This is what the book value, 25,000 and 2 lakhs. So 25,000 land and building realized, that means it is sold for 25,000 only. And other fixed assets having a book value of 2 lakh, that is also realized the same 2 lakh book value amount by selling other fixed assets. So this is what a receipt to the liquidator. Now liquidator is going to write this in receipt side to land and building. Yes. How much it is?
25,000.
Yes, 25,000. And then other fixed assets also going to fetch you, get you 2 lakhs. So that is also we have to write here. So 25,000 from this land and building. Then from other fixed assets, liquidator is going to get 2 lakhs because that is the book value, and that is what the liquidator is going to get, because there it is stated in the problem itself. The fixed assets were realized at book value. Yes, it is done. We get that fixed assets to the debit side. This is okay. Then next thing is current assets at 80% of book value. Now tell me, what are the current assets at asset side in this balance?
Stock and debtors.
Good. Stock and debtors are two current assets in this balance sheet. So stock having a book value of 5,25,000 and debtors has a book value of 1 lakh. But the current asset, that is stock and debtors, going to realize at 80% of book value. That's why the liquidator is going to get 80% of these two amounts, 5,25,000 and 1 lakh. So that 80% we have to write. Stock 5,25,000 into 80%. How much it is? 5,25,000 25.
42 lakh.
Okay.
No, 4,20,000.
That's it. Multiply it with 80%. So it will give you 4 lakh.
20,000.
Okay. Next is your debtors, 1 lakh. So out of 1 lakh, we are going to get only 80%, right? 1 lakh into 80%. Correct?
Yes, miss.
So what is the debtor realized amount?
80,000.
Very good. 80,000. This is what we realized. That means this is what the liquidator actually get, or now we have to total it, because we, in order to know what is the total amount liquidator has, we have to total this. This is 7,25,000, which now liquidator has with him. What is the next step? Next, you have to pay out the liabilities, but that should be in a preferential manner. So first, in case of liability, you have to pay. We already work out here that first you have to pay. Where is that? Yes, this liquidation expenses first we have to pay, then preferential creditors, then secured creditors, then unsecured creditors. So in liquidation expenses, in this case, in our case, see, we have to pay liquidation expenses and liquidators remuneration 3,000, 10,000. So first we have to pay these things 3,000 and 10,000 on account of liquidation expenses. Then preferential creditors are also there. Preferential creditors are also there. Yes, no, it is not there. Okay, preferential creditors means any outstanding workman's compensation is there, or any salary wages are there outstanding, or whether the outstanding taxes are there. So it is not the case. You can see at this liability side. So preferential payments are not there. So you can go towards a secured payments. Secured creditors are like your debentures. So that also you have to pay. In case of bank loan, it is secured by pledge of stock. So as soon as the stock is realized. So here we realized 25, yes, it is 80% we realized, na? So that's why we have to, 1 second. That's why we have to make the corrections. What corrections we have to make now? What is the stock realized? Out of that, first we have to pay towards your what happened? One second. So it is 180. Okay. I just logged out. So, you can see. This is secured against a pledge of stock. What? Bank loan. So bank loan is 4 lakh. So that should be paid out of this realization of stock. So first we have to do that thing because it is already pledged. And secured creditors means that those are the debentures which are secured on floating charge of all assets. And unsecured creditors here are in this balance sheet. And what are the unsecured creditors? Can you guess? Anyone can guess from this liability side which is going to be a unsecured creditor? Bank loan is secured because it is pledged against the stock. 8% debentures are also secured payments because those are secured against floating charge on all assets. Interest is also secured because that is written here. What about the creditors? Are the creditors secured creditors? No, these are the unsecured creditors because they are not pledged against any assets. And also preference shares and equity shares are also unsecured payments, but these are internal liability. First we have to pay external liability. In case of external liability, creditors are unsecured creditors, right? Creditors are falling in the category of unsecured creditors. So first we have to pay liquidation expenses, but at the same time, as we realize the stock, 80% of the stock, that is rupees, this thing 4,20,000. So out of this 4,20,000 we have to pay this thing, bank loan of 4 lakh, because it is bank loan was secured by pledge of stock. As soon as the stock amount is received, first we have to pay bank loan. That's why first we are paying here bank loan. To do that first, that is very important. So this 4,20,000, we have to write in inner column because we have to minus that bank loan. So what is less bank loan? What is the loan amount? Why we are doing it? Because it is pledged. That means it is bank is having charge on this stock. As soon as the stock is realized, that means as soon as the stock is sold out, bank is going to deduct these bank loan amount, that is 4 lakh first. So first bank deducted this 4 lakh out of this 4,20,000. So outside we had only
20,000.
yes, only 20,000 that we realized. Suppose in this case only 3 lakh or only 3,80,000 or only 3,50,000 we realized from stock. What happened that time? 3,50,000 minus 4 lakh. What is the amount? Suppose 3,80,000 minus 4,20,000 minus 40,000 is there, na? So that should be treated as unsecured creditors here, but that not happened here. That's why we get a surplus 20,000 to the outer side of receipt column. So 3,25,000 we have, or the liquidator has as of today. Now he is paying out liquidation expenses first. So what are the liquidation expenses? We know already that what are the liquidation expenses here? Liquidation expenses and liquidators remuneration amounts to rupees 3,000 and 10,000. So pay that first. Liquidators remuneration and liquidation expenses. Liquidators remuneration is 10,000 and liquidation expenses 3,000. Yes.
Yes, miss.
3,000 put here. One thing all the time we have to do is exactly what balance is left with us. So that's why we have to do one working note, the balance amount. All the time we have to calculate this balance amounts means balance amount. In this case, this one is 3,25,000. First we get this. Yes, so 3 lakh I will put here. Okay, this is what a receipt, and this is what a payment, and this is what a balance. So receipt is 3,25,000. As of now, we know this thing. Now we paid 10,000. Also 3,000 this that expenditure. So what is the balance now? This is equal to this.
3,12,000.
Yes, minus this, and this is equal to this minus 3,000. So 3,12,000, that is your balance. It will happen in next case also. So what about next? This 3,000 deducted. So now we have 3,12,000. So we can pay remaining loan also, or whatever the liabilities are also. So we will see what are the next liability, or what is the next preference for this. As we paid liquidation expenses, then we have to pay preferential payments. Here no preferential payments are there. Then you can see here, what is the next in preference? Preferential creditors. No preferential creditors. No outstanding salary, workmen's compensation, or other taxes are there. Government taxes are there. So no preferential creditors in this case. Next, go to a secured creditors. Find out the secured creditors. Are there any secured creditors? Yes. Debentures and interest
Yes,
thereon
ma'am.
are secured by a floating charge on all assets. Yes. So debentures and interest on outstanding debenture, this 1 lakh plus 8,000 that we have to pay now. Okay, so pay out this by debenture holders account. How much? 1 lakh
1 lakh.
principal amount plus 8,000 interest, na?
8,000.
That is also we have to pay here, because that is also secured. They are saying you that, or it is given in your problem that this debenture and interest thereon, interest on debenture is also secured by a floating charge. So 1,08,000 we have to pay now. You can pay out of 3,12,000, 1,08,000. Yes, you can pay it easily. So pay
Yes, ma'am.
1,08,000. Now see, we are deducting here 1,08,000. How much it remains? 2,04,000. Right?
हाँ मिस राइट 2,04,000.
So 1,08,000 is paid. Now 2,04,000 remains. What is our next preference? What is our next payment as per preference? Unsecured
Creditors.
Very good. So now pay out all unsecured creditors. What are the unsecured creditors here?
Creditor.
Yes, only this creditor, 2 lakhs. Now see what is the balance. You have 2,04,000 in your account, and you have to pay 2 lakh. Yes, as per your balance sheet, creditors are 2 lakhs. So 2 lakhs you can pay. So pay out whole 2 lakh rupees, because out of 2,04,000 you can pay 2 lakhs. So pay out these 2 lakhs by creditors. Yes, 2 lakh is paid. What is the balance now?
4,000.
Yes, only 4,000 is left with us. This 4,000 is the balance now. Now what happened here? We paid all external liabilities, bank loan, debentures, interest on debentures, creditors, all external liabilities are paid out. Now the time is to find out or to pay for the internal liabilities. But now we had only 4,000 left in our, you can see here, only 4,000 is left in our balance. Only 4,000 money is left. And how much we have to pay to preference shareholders? Because in case of
80,000.
internal liability, we first have to pay to the preference shareholder, then we can pay to equity shareholder. The preference shareholder having a liability of 80,000. We can't pay 80,000 because we had only
4,000.
4,000 in our balance. So pay that 4,000 to preference shareholder. That's all. The only preference shareholder from internal liability is going to get 4,000, though they have a claim of 80,000. And equity shareholder going to get nothing, zero amount. So here, pay first to preference shareholder. They are having a claim of 80,000 because they are showing a liability of 80,000. But as the liquidator left with 4,000 balance in the account, so he can pay only 4,000. So pay that 4,000 first to preference shareholder, and now the money is going to be zero. So here payout to preference shareholder. By preference shareholder only only 4,000 because the liquidator has left with only 4,000 rupees. Now make a total of this also. What will be the total? 3,25,000. So whatever money received by liquidator, that is paid towards a liability by liquidator. So here the accounts get tallied. That means this account is right one. Whatever money was spent on liquidation of company. So this problem gets over here. Now you understood how to solve this problem. How to solve this liquidation problem. You can get a screen shot also. Take a screenshot so you can refer it afterwards. Not so well, company limited. Liquidators.
Done, miss.
So we
Done, miss.
solve this problem.